Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 24, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, check it out. We had over the last several days, and we've been talking about this each and every day after the bottom that was made, which we did identify in advance by the buy. Market went up a little bit, had a little misdirection day, but was essentially eating time off the clock, going sideways, getting ready for another push higher. So, what happened today? The overnight futures were pushing higher. Today, we got that push higher into the convergence of the 220 period moving average as prescribed. In addition, if I just put up the fib retracement lines on here, you'll see we pretty much hit a bullseye to a 382 retrace, which is a normal garden variety retracement operation. Remember, we've been looking at the weekly chart. Once again, we look at the weekly chart, and what do we have? We have a pop above the 50-week moving average. They've yet to fill this gap left open from a couple of weeks ago, but they're close. They're less than $1 in the SPY away. Remember the lazy swing trader automagical algo system. Right here, we're looking at State Street Corp, STT. The lazy swing trader automagical algo was buying up State Street, STT, at 86.01. Nobody else wanted it. It looked like a falling knife, like everything else. The LST or lazy swing trader is programmed to be buying stuff when nobody wants it, selling stuff when nobody thinks it can come back down. What happened? We bought it. The thing shot up. Today was a profit day. First exit 92.08. Guess what? Now it turns into a risk free, emotionless trade. That was a gain on the first exit of 7.06%. That deserves a how you doing? That's the lazy swing trader automagical algo system. If you're not familiar with that, that's a system that gives you a watch list. It's automated trading, if you will. It gives you text and email alerts off the watch list so you're prepared anyway for what's coming. The system gives you the profit targets, it gives you the stop loss. It's a do it for you system. Lazy swing trader, automagical algo system. It was years of a labor of love. Back to the spiders for a moment. So the spiders are the S&P futures, or S&P, if you will, was up about 100 handles today. Spiders up about 10 handles. What do we expect tomorrow? Can there be a retracement slash pullback day? Absolutely. Can there be follow through day? Absolutely. We don't know which one it will be, and neither would be out of the ordinary. Generally speaking, once they trade up into a convergence of moving averages, it's a normal and garden variety stall out point. Keep in mind, nothing goes in a straight line. Nothing goes from point A to point Z without pullbacks along the way. But the market, if you'll know, is doing pretty much everything we said. It found the mid-March low. It shot up from there. It ate some time off the clock. We talked about it for several days. And here we are making the secondary push. Again, how do you like dem apples? Here's a little peek at inside the numbers today. When you have one of these gap and go days, it's not really made for trading. It's not a volatility day. It was pretty much a straight line up. But we did have some opportunities on the board. Traders did make money today, and you'll have to know where that was. I'm going to highlight a few important things like 572.65. If they're above the pivot, which was identified at 0 dark 30, she would go to the next number up in the sequence, 572.65. Let's go check on where that was. Those numbers are targets and they are overhead resistance. We're looking at a 5-minute SPY chart where right of the vertical is today's activity. And you can see she stayed above the pivot. And guess what? She went right up into that number, stalled out a little bit, pulled back. We had traders take a little scalp trade there. She went higher. She came back to test that. As long as she's above that on candle closes, we had another number above. And you'll see in the notes in a minute that number was 575.95. She didn't quite get there today. Doesn't mean she can't or won't get there tomorrow. What I urge you to do is pause the video, read the notes, see what's in here each and every day from a commentary perspective. Go ahead and double check the work. There's not a lot of work today to double check, and only the other number that wasn't hit besides the 572.65. But generally speaking, double check the work, see what's in here each and every day. If you're an intraday trader in the SPY, the S&P 500 options on the S&P 500, futures, micro futures, exchange traded products, it doesn't matter. This work will do you and service you well. We have stocks on the move. Only had one today because of the gap and go situation. EDU was the number, or the stock, I should say. Here's your zone in EDU, first and second number. Came into the second, spiked it, ripped it back up in the other direction, producing a trade for members that were interested in trading EDU this morning. We had plenty in the live trading room. What else do we have? We have a list of markets, a dozen markets that are covered each and every day. In addition to the spiders, we have the Qs, we have the IWM, SMH, we have the bond market, TLT, we have gold miners, we have crude oil, gold, silver, natural gas, the dollar, Bitcoin. We're contemplating putting the Fab 7 up on the board each and every day. The jury's still out. I'm getting feedback. We're looking at it. It's a lot of work, but we're looking at it. Let's go over to Camp IWM, as you know, is my favorite market leading indicator. They ricocheted off the low. We saw that. We talked about that. They ate time off the clock like everybody else. And today they jumped over the 20 period moving average, another gap and go situation. And we know when the spiders are up $10, everything's going to be up. It's all the same market type of situation. Just as a refresher where that black line came from, it was the weekly chart, big time breakup candle low. We know about those. We put it on the board. She ricocheted off of it. The rest is history. Now, from a weekly chart perspective, she's in the process of, and we don't know whether she'll get to the top, but she's in the process of climbing the last big time breakdown candle in the sequence. I would put this number on a sticky note to 1165. I believe that's an important number, and I believe that the IWM will achieve that number. Doesn't have to be tomorrow, doesn't have to be the next day, but I believe they're targeting that number at a minimum. Minimum. That's a new technical term. No doubt we're still in a downtrending situation, but we're talking about bouncing from a low, and we take the market at face value, what's happening today. Similar situation with the folks down at the transportation department. Found a low where we identified before. Still obviously in a downtrending situation. Below all the moving averages, you know the jingle, the trend is your friend. But at the same time, the 20 period moving average is magnetic and she'll pull price into the 20 period moving average at the same time. She's climbing the last big time breakdown candle in the sequence. A la the folks down at the transportation department. No different with the Q people. It's all the same market. You see here into the 20 period moving average, just short of the 200. Same routine, bottomed out, a time off the clock, secondary pop today. Just like all the other markets, no new revelation, nothing new to see here. I think more importantly is to take a look at the weekly chart. Above the 50-week moving average is more important than the daily chart. We talked about it last week. Money managers are eyeballing the 50-week moving average. If price is above a 50-week moving average, they're comfortable. If price is below a 50-week moving average, they're looking to sell stuff. They're looking to protect. Therefore, keep your eye on the 50-week moving average. And that's just not about the Qs. That's about any chart you look at, whether it's a stock, an index, it doesn't matter. 50-week moving average, important to big-time money managers. About the financial space, we know about that. If there's nothing wrong with the financials, there's generally speaking nothing wrong with the underlying structure of the market. And therefore, we look at the XLF and we see they're above the 20 period moving average, the 100 period moving average, never came close to the 200 period moving average. And they're now working on getting above the 50 period moving average on the daily chart. Heed the financials. If the financials are strong, likely speaking, this was just a correction with nothing wrong with the underlying structure of the overall market. From a weekly chart perspective, all they did was come down, spike the 20-week moving average, rally right back to it as of today. Really nothing wrong with the financials as I see it, at least in terms of the XLF. And then you have Smashmouth or the Philadelphia Semiconductor Index. They bottomed, a time off the clock like everybody else. They had the pop today above the 20-period moving average. In fact, don't forget, they essentially bottomed before everybody else. Just like all the other markets, keep in mind, still in a downtrend, but working on the recovery or rescue operation, as I like to call it. A lot of these charts look the same. Nothing new to see from one to the other, generally speaking. And therefore, have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.